Does it feel like the market is not in sync with how you're feeling or what you're hearing? I think it's important to understand that the market is forward-looking. That means the market is constantly adjusting for what is coming ahead of it and trying to anticipate what those things will be. So as the market thinks the future is going to be changing, the market is adjusting very quickly to what those changes are. Now, the way we feel about it, our investor sentiment is in the moment, more so in the moment. How do I feel about what's going on in the market? So that is lagging the market. It's not adjusting on a forward-looking basis. It's adjusting now. And then the economic data that gets reported is backward-looking. Oftentimes, it's not even reported right at that moment. There's a lag in getting that information. So that becomes good information, but it is backward-looking. And we can't base all of our forward-looking decisions on backward-looking data. So we have to be aware of that dichotomy between the two. If we're driving a car, we don't try to drive looking in the rearview mirror, because that is how accidents can happen. We've got to be looking forward to what's coming ahead. So it's important when you're planning your portfolio that you keep a real good focus on where you're going. You need to know, what is that end point? When are you going to need this investment? What do you need it to do for you at that point in time? How much time is there between now and then? How much risk are you willing to take? How much risk do you want to avoid? How can you invest this money to get you from here to where you need to be? Those are the key questions that go into coming up with a good investment plan for you. And once you've come up with that, then it's important to stick to that plan throughout the different periods of the market, because that's how you achieve the average growth that you're aiming for. So as you're looking at your plan, take a minute to say, do I have the right investments lined up for each job that they need to do for me? For my own clients, because I do retirement planning, I'm looking at cash flow needs in retirement. So I've got that short-term bucket for the cash flow for the first 5 years. I've got that midterm bucket that's going to be lower volatility so that we can replenish that cash flow. And then I've got that long-term bucket so that we've got that growth over the entire lifetime that will help them keep up with inflation, that will help them achieve all of their goals in the future and leave a legacy that they want to leave. So those are the kind of things that you want to think about for your own plan. Think through what you need your money to do for you and where you can invest it on a forward-looking basis so that it will achieve exactly what you need so that you can be on your best path for your retirement.